Let's dive deep into the world of stocks, finance, and investing. Today, we're focusing on one of the most talked about stocks in the real estate investment trust, REIT sector, Medical Properties Trust, also known by its ticker symbol MPW. Whether you're a seasoned investor or just getting started, you're in the right place to understand the potential and risks that come with MPW stock. In today's video, we'll be covering everything you need to know about MPW. We'll start by breaking down what the company does, explore its financials, key metrics, and earnings. We'll also dig into MPW's current stock performance, its dividend yield, market outlook, and most importantly, whether it's a buy, hold, or sell in today's market environment. So stick around to the end for our in-depth analysis, and don't forget to like, subscribe, and click the notification bell so you don't miss any future updates. Section 1. What is Medical Properties Trust, MPW? First things first, let's talk about what exactly Medical Properties Trust is and what they do. MPW is a real estate investment trust, REIT, that focuses specifically on healthcare real estate, particularly hospital properties. REITs are companies that own, operate, or finance real estate that produces income. In MPW's case, it invests primarily in hospitals and healthcare facilities, leasing them back to healthcare operators on a long-term basis. The company was founded in 2003 and has grown to be one of the largest owners of hospitals in the world, owning properties not only in the United States but also in countries like the United Kingdom, Germany, Australia, and Spain. The business model is relatively simple but effective: acquire hospital properties, enter long-term lease agreements with operators, and collect rent. This setup provides MPW with a steady stream of income and allows investors to participate in the growth of the healthcare sector, which is seen as defensive and recession-resistant. After all, regardless of the economic environment, healthcare services are essential. But that's not all. MPW also provides financing solutions to healthcare operators, which allows them to grow without taking on excessive debt. This dual business model of both owning healthcare real estate and offering financing gives MPW a unique competitive advantage in the REIT space. Section 2. MPW Stock Performance Overview. Now let's dive into MPW's stock performance. Over the years, Medical Properties Trust has seen periods of strong growth, driven largely by its expanding portfolio of hospitals and healthcare facilities. But like all stocks, MPW hasn't been immune to market volatility, particularly in recent times. In 2020, when the COVID-19 pandemic hit, healthcare REITs like MPW initially took a hit. Hospitals and healthcare systems faced unprecedented challenges, and there were concerns about whether tenants would be able to meet their rent obligations. However, MPW rebounded fairly quickly as investors recognized the essential nature of its properties. Fast forward to 2023, and MPW stock has been somewhat volatile. As of the latest data, the stock price has fluctuated within a wide range. It's important to remember that while MPW provides exposure to the defensive healthcare sector, the company is still subject to broader market forces, including interest rate hikes and changes in investor sentiment. We'll talk more about how these macroeconomic factors impact MPW later in this video. Section 3. Financials and Key Metrics. Next up, let's talk about the numbers. MPW's financials give us important insights into its stability, profitability, and overall potential as an investment. Let's go over some of the key metrics investors should look at when evaluating a REIT like MPW. One of the first things we look at is funds from operations, or FFO. FFO is a key metric for REITs because it gives us a clear picture of cash flow, removing the effects of non-cash expenses like depreciation. MPW has historically had strong FFO, which has allowed it to pay a steady dividend to its shareholders. Speaking of dividends, MPW is known for its attractive dividend yield. At the time of this recording, the dividend yield is quite high, often exceeding 10%. This makes it an appealing option for income-seeking investors, especially in a low-interest rate environment. However, a high yield can sometimes be a warning sign, so it's crucial to look at the payout ratio, which tells us how sustainable the dividend is. MPW's payout ratio has been hovering in a manageable range, but we'll need to keep an eye on it, especially if the company faces pressure on its rental income or if its tenants experience financial difficulties. Another important financial metric is the debt-to-equity ratio. As a REIT, MPW relies heavily on debt to finance its acquisitions and growth. As of recent quarters, MPW's debt levels have been on the higher side, which is something to consider, especially with rising interest rates. Higher debt means higher interest payments, which could squeeze margins and reduce cash available for dividends. However, the company's long-term leases with healthcare operators provide a level of stability that helps mitigate some of these risks. Section 4. Current market conditions and risks. Let's zoom out and look at the bigger picture, how the current market environment is affecting MPW stock. There are a few factors that have been weighing on MPW recently, and investors need to be aware of these risks. First, interest rates. We've been in a rising interest rate environment as central banks around the world, particularly the Federal Reserve in the US, have been hiking rates to combat inflation. For REITs like MPW, higher interest rates can be a double-edged sword. On one hand, it increases the cost of borrowing, which can make it more expensive for MPW to finance new acquisitions. On the other hand, higher rates often lead to a rotation out of high-yield stocks like REITs as investors seek safer, fixed-income investments. Another major factor is tenant risk. While MPW's tenants, healthcare operators, are in a defensive industry, they're not immune to financial pressure. Healthcare systems are facing challenges like labor shortages, rising operational costs, and regulatory pressures. If MPW's tenants were to experience financial distress, it could lead to missed rent payments or renegotiations of lease terms, which would hurt MPW's bottom line. Lastly, there's the issue of market sentiment. MPW has been the subject of some short seller reports and bearish sentiment in the past year. While short interest doesn't always translate into a stock price decline, it's something to keep in mind. The healthcare sector is typically seen as a safe haven during economic downturns, but REITs are still susceptible to market mood swings, especially when there's uncertainty surrounding their tenants or financial outlook. Section 5. Is MPW a buy, hold, or sell? Now for the big question, is MPW a buy, hold, or sell? Like all investments, this depends on your individual risk tolerance, investment goals, and market outlook. If you're an income-focused investor, MPW's high dividend yield may look extremely attractive. The healthcare sector has long been viewed as recession-resistant, and MPW's long-term leases with healthcare operators provide a steady stream of income, which supports its dividend payouts. For investors looking for consistent income, MPW could be a good option, provided that you're comfortable with the risks we've outlined. On the other hand, if you're more concerned about stock price appreciation and growth potential, MPW's debt levels, rising interest rates, and tenant risks might give you pause. The stock's performance has been somewhat volatile, and any financial difficulties faced by its tenants could have a significant impact on MPW's future earnings and stock price. Additionally, if interest rates continue to rise, it could make it harder for MPW to grow its portfolio without taking on more expensive debt. At the end of the day, MPW might be best suited for long-term investors who can stomach some volatility and are looking for income rather than rapid growth. If you believe in the long-term growth of the healthcare industry and trust MPW's management to navigate the current headwinds, holding or even buying more at current levels could make sense. However, if you're more risk-averse, you might want to wait and see how the next few quarters play out before making any big moves. Conclusion. That wraps up today's analysis of Medical Properties Trust, MPW stock. To recap, MPW offers an attractive dividend yield and exposure to the healthcare sector, but it comes with risks related to rising interest rates and tenant financial stability. Whether it's a buy, hold, or sell depends on your personal investment strategy and risk appetite. What do you think about MPW stock? Are you bullish or bearish on its prospects? Let us know in the comments below. And as always, don't forget to like, subscribe, and hit the notification bell so you never miss an update from us.